This is Justin Pulitzer. This is my midweek video for Wednesday, July 10th, 2024. I am filming this late night Tuesday, early morning Wednesday. It's 12:04 a.m. So, a lot to discuss. Sentiment coming into this week was a little bit of a pullback. People went to the bear side. I think people just saw the new highs and got a little bit nervous. Makes some sense to me. As far as the CNN gauge goes, they're not overly optimistic either, roughly in line with us here in the 52% area. Week ago was 48, month ago 45. So yeah, a little bit of a shift bullish, not that dramatically. There seems to be some certainty surrounding the presidential election. Trump was actually up to 58 at one point today. Biden's at 20.3 and Harris slipped back to 10 post Joe expecting to stay in the race. So it looks like Trump's going to win, and the bulls on Wall Street are going to get their deregulation and tax cut extensions. As far as our economic data goes today, like I said, Powell spoke. I'll just sum it up. I mean, he spoke last week, so it's really not that big of a grasp if you want to pause it and read this. Basically, they are seeing some progress in inflation. It's not enough or consistent enough for them to want to cut rates just yet. So it's higher for longer, maybe until at least September is my guess. I think in the July meeting, we might get a little bit of an update on that. I think they are excited to see the economy slowing a little bit. And it's shocking because the economy has really been stall speed. It hasn't been as strong as they seem to think it is. And they're seeing the jobs market cooling a bit, which could lead to some layoffs. I think the Fed would never say that, but they would very much welcome that. We are right before earnings season. Curious to see how earnings season is going to play out, if we're going to get the blow off top, if earnings are good and just stocks can't go higher, if there's a pump, they run it up into numbers and then it dumps, or if we get the shake and bake, if we see a pullback before the earnings. After that, we have the Olympics between July 26th and August 11th. If China, by the way, does make a move on Taiwan, it probably wouldn't be until after the Olympics because they don't want to be barred from the games. So I think it's free shot on goal on the China stocks, assuming, the CCP does a little bit more with their banking system, which is having their sort of Lehman moment at the moment, and starts stimulating the economy, which they may. So it could be a free shot on goal. We saw a couple of moves up in Baidu and Baba today. We'll see if that has some follow-on in the next couple of days, but I've been saying I thought those were kind of due for a bounce. So yeah, up until August 11th, I think those stocks have some air cover. As far as the probability for rate cuts go, it ticked down a little bit today, but really just a little bit. We were at 24.4% of them staying, and now we're at 26.7%. So yeah, I mean, it looks to me like traders are pricing in the move happening in September at probably the earliest. We'll have to see how that plays out. Treasuries, that looks like they're going to be one or maybe two and done. My guess is if the Fed does start cutting, it's going to be like every other meeting, because they're going to want to make sure inflation doesn't tick back up, and they'll give some language where it may be even hawkish cuts where they're saying that they're going to be cautious and patient and possibly might have to resume back to hiking. They'll of course say they're data dependent, but I think once they start the cutting cycle, they don't really want to reverse. It would make them look a little foolish. My guess, though, is they want to see better data consistently. They got lucky a year or so ago, and then the inflation ticked back up. I think it's going to be very hard to wring the inflation out of the system until they get better energy policy, which again could happen with the Trump administration. That's really the whole root cause. That and the Ukraine war, which he says he'll resolve as well. But that's really the whole cause for inflation, the higher energy prices because of strict regulation and this whole Green New Deal stuff. As far as the VIX goes, we're not confirming new market highs. I mentioned this in my super video yesterday. And I said, there's some loose change here. One of them is that the VIX is not making new lows to confirm the move up. And the other one, of course, was not seeing an extreme sentiment gauge. We're rather modest, and it's not sort of in that blow off type of euphoric phase. So I'm keeping an eye on this VIX. I really view moves up just to the 200 MA as just garden variety reloading. But if you short term want to use the 50 MA and the downtrend line, that downtrend line, if it were to breach tomorrow, would be 13.25, and we can move up to 14.41, and who knows, maybe even all the way up to 15.51. It's still super cheap. I like putting on pure directional plays, meaning buying puts, buying put spreads, buying calls, buying call spreads. I don't really like selling premium here when it's this cheap. So TNX, which used to be $TNX, is now $CGI. I don't know what the wisdom of that is, but we did see a pop up and now down, and we're making some lower highs and lower lows. We did have a trend break, but the 50 MA pretty much repelled it. We could be in for a situation here where we're forming some higher lows and lower highs, and we're just in a triangle for a while. So that's also a scenario, but as long as rates are benign, meaning not spiking, it is good news for PE multiple premiums. The TLT, and we're also coming into a seasonally shifting weaker period for oil, which I think would help as well. You know, that whole mean tree reversion, and the XLE is starting to look pretty crappy. I think the TLT is really just caught between this 200 MA, 50 MA area on the lows between 91.54 and 91.89, and the 20 MA at 92.87. I think whichever one breaks probably has movement to the, I guess, channel, or, you know, trend channel low at 90.31, and on the upside I would think 94.07, and maybe even a run back up to 94.44. So wait for the 20 MA or, you know, this 200 MA, 50 MA zone to break, and then it's a go with in either direction, in my opinion. XLU, you're still in a up channel with a little bit of a downward bias, although we did break trend today. And, you know, I'm curious to see if we can clear the 50 MA. I do think between that 70 and 70 quarter where we broke down from, that was the fulcrum pivot that we saw in 529, could be some resistance now. I think if you're already long, low of day at 68.55, which would take you below the 10 MA, is probably a stop and a short. And I would view the 100 MA as an area, if we did achieve it at 66.86 and rising, to sell 200 MA puts at 64.13. What I actually may do is do a 1-by-2 put ratio if I could get filled. I don't know what kind of premium would be to be buying 100 MA and selling 2 times 200 MA, or buying 1-by-1 and then doing an overwrite lower somewhere below 62. I think that trade is okay. XLF. So the financials are trying to break trend here. We did see a little bit of topping tail action, but we're right up against that 78.6 at 72.04. If that can clear, I think we get up to, 42.04. If we could clear that, we get up to 42.49. If we lose the 50% fib here at 41.34, I think we're probably pulling back down to the 38.2 again at 41.18. I think as long as 41s hold-ish, it's sort of just chop and okay. But the 100 MA has been the key support. So yeah, that's for that 41.02. If we do pull back that zone, I'd be looking for some support down there. The JP Morgan. So Jamie Dimon had come out and said he's not buying back stocks and is going to, retire earlier. Then they announced that they are going to start buying back stocks. So the stock made new highs, pulled back, tried to break down below the 204.42 to 205.88 key breakout zone, and now we're back up over it. We didn't even fully test the 10 MA, which is currently 203.75, but as long as we're above 205.88, I think it's fine to be long. Below, might want to stop out. On the upside, if we do keep going, channel high, if we did the full Monty tomorrow, it'd be 215.58. As far as the Goldman Sachs goes, I think people are thinking more M&A could be on the horizon with a new administration, less regulation, and usually under Republican administrations, there's more M&A. I know the Bush era was, just a bonanza for that. 471.48 is a must clear and hold, and we're a little bit above there. The 2 times range is 482.43. And I guess is there a 2.618 here? Yeah, 542.09. I don't know if we're going to get up there so easily, but the 10 MA has been holding, and it has attempted to kind of break down. We're riding the channel like sloppily on the upside, but if we do lose the 10 MA, I'd say even low of day at 461.58, there's probably a quick short down to the 50 MA, 20 MA area at 453.80 to 456.42. Moving right along. The dollar is back up over the 105, which is no bueno. We got into the 104.636 to 105.01, so very simple. Stock bulls need it below 105.01 and really below 104.636. and 104.438. But I do think there could be some resistance between the 20 MA and 10 MA, which are now downward. Well, the 20 MA is flattening, but the 10 MA is downward sloping. So 105.478 down to 105.432. If that starts clearing, we could make another run at the channel higher at 106.018. And, you know, stronger dollar, stronger oil, higher rates, no bueno. If those are going the right way, meaning, you know, trending downward, that's good for the equity markets. Bitcoin, they've tried to break it down here. We didn't quite get the full check back to the 200 MA and old breakout at 53,125, but we are back up over 56,910 with a couple of look below and fails. I mean, really, it confirms over 58,525. If that can clear, I think there could be some smooth sailing. You see I have an alert set near the 20 MA at 52,505, and technically a look below and fail could get us back up to this reference range high here as defined by the 624 candle at 64,005. If we start sinking back below 56,910, the look below and fail could have failed, and we could just ride the channel lower, maybe to where it lines up with the 200 MA, wherever that is at the time. Gold, as defined by GLD here, we had a bit of a look above and fail of the range. We have a bit of a dubstep setup. I think if you want to be long over 219.29 and then press it on up over 220.04, anything below the two-day low here at 217.27, I think comes down to at least the 20 MA at 215.86. I'm sorry, 215.68, and possibly a run down to the 213s and 212s. We'll could be just be in a big consolidation here for a while. But if the look above and fail fails over 219.97, we could go to 222.36 and probably retest the 225. So if you want to do some kind of a spread situation for either scenario on a trigger, I like. Oil rallied. We got right up to the 78.6 in the underside of the old up channel. We pulled back, and we are now technically below the 61.8. So if you want to be short, you could use 81.87 as a stop, or the 10 MA at 82.30. Anything back up above there probably rallies again. On the downside, the 20 MA is the first key support at 81.05. The 100 MA at 80.43, and really the 50% fib down to the 129 reference high at 79.29 to 80.08 is likely key support. You have a stacking of MAs here between the 20 MA, 100 MA, and then the 200 MA and the 50 MA down near that 79. So I do think there should be some support in the 79s and 80s. If there's not, that would be, again, very bullish for equity stocks, and we'd continue to see the rotation back into tech. Seasonally, this isn't such a strong time for oil. XLE couldn't clear the 50 MA. It's still in a downtrend. We haven't fully pulled back to that 87.11 to 85.67, which we still may. The 200 MA has been some key support here if you want to take it right or right out long, if there's like a higher low tomorrow, and then press it up over the high of day at 89.74. Probably could rally back to 91.35-ish. But we may just be in this listing lower kind of scenario, and I'd be an interested buyer down in that prior breakout zone. And it has been some key reference support. XBI, very nice little move here, breaking trend, but up into some 94.32 to 94.93 resistance, which we've seen multiple times now. If that can clear, channel high comes in around 97s, and who knows, maybe it just rides up for the move to a hundo. But I think anything over the channel, which is 93.39, is still bullish. Below 93.39, I'd be a little iffy. And if we were to lose low of day at 92.85, we'd probably come down and test the triangle low here and the 50 MA confluence at 90.78. Lily is getting the JP 2.618. Boom, up to 934.23. We even hit 935. Channel high could take us up to 957.35. And who knows, maybe we even make a run at the 1012 4.236. I think this will imminently become a split bro. Shorter term, the 10 MA at 910.45 and rising, and 20 MA, which has been the key most recent reference support from 7.2 and 7.3, is at 895.04 and rising. So I would imagine that's still by the dip until it is not, because traders do what works until it doesn't. Gilead, they had an upgrade yesterday, a downgrade today, but the downgrade got bought with a bit of a higher low. I'm looking to see if it can clear the 100 MA. I discussed this in the weekend video. I ultimately do think this can make a run back up to the 71s and maybe even the 200 MA at 73.65. below the 50 MA, you probably want to stop out at 66.19. That to me would be problematic, and you could even maybe play for a move down to the 62s with some kind of a put ratio. But I think this could be a range trade for a while. I liked, that they, let me just go back. I liked that they had that new drug, the stock, I like that they had that new drug announcement. The stock popped up, pulled back basically to the 61.8, and now looks like it could be recharging off of higher lows, which is always nice. I'm going to pull up SPY, but we're going to talk about ES and NQ first. And let's roll that beautiful bean footage. So we're up into some potential short-term resistance. We did have a little excess today. Same thing with the Qs, which is always a little concerning. We say that markets don't top after hours, or Fridays usually. They don't usually tend to bottom or top Fridays. It did this last time, but that's more the exception than the norm. It's got to hold 56.26 short-term. If that fails, we could repair the rich close at 65.0575 from Thursday, and that lines up with a breakout zone. As far as Qs go, they kind of need to hold this 60,000. I'm sorry, 60,000, 20,670.75 and 20,638.5. That, of course, that slip is going to give the people who think I'm a time traveler some credence. After that, we could repair some rich closes. There was the 20,535.75, and my guess is the channel low and the 200 MA would line up at the time. It would be currently 20,554.71 and rising. So yeah, we'll have to see if there's a gap up on the open and we hit the channel high at 20,850, 851-ish. Probably a good area to book some gains and maybe even try a right or right out short. The SPY. So the expected move this week is $5.11. The max pain pin, they say, is 550. So they're thinking a check back to the breakout at the 620 high and the 10 MA. Very possible. Could happen. That was resistance, and what was resistance now, quote unquote, should be support. Maybe if the 20 MA lines up there too, would be even better. Bit of a little spinning top today. Be careful if we have a lower high and then lost low of day at 555.52. You could use the close at 555.82 as a stop. If we do keep going, the channel high is up at 564.13, and depending on how long it takes to get there, the 2.618 lines up with it very well at 566.87, and that would be somewhere around 712 if that were to happen. We are seeing a little bit of spinning tops up here, which often is, just a sign of potential reversal or stall. So just be a little careful there. The expected move is $5.11. I would imagine the move down would be higher than, would be more than the move up, which would probably be capped at that $5.11 because VIX would start pumping if we get a dump. The DIA, it has a bit of a head and shoulders. I think that this zone with stacked MAs is key between the 100 MA at 389.12 up to the 20 MA at 390.80, which of course lines up with the 50% fib at 390.70. I need to see it clear the downtrend in the 78.6 because once we stalled at the 396.59, 78.6, we pulled back to the 61.8 and then some. So I think if you're aggressive over 395.04 and then over 396.59 could fill up the pennant to 401s. But I'd be real careful if we can't hold that 390.70. I would actually venture to say we probably wouldn't hold the stacked MAs, although we might, and could see a run down to the channel low at 386.91. We'll have to see. Expected move is $3.96. Max pain pin is $3.93 as of now. These all will change, though, in the next day or two, I think. IWM. In a bit of a pennant here, needs to clear the 50% fib at 203.07 for some runs up to reference highs at 204s and 207s. If we break on the downside, we could see the 198s and revisit the 197s. To me, this looks just like a lot of chop at the moment, and we got to wait for the definitive break. I think you're better off just trading the other, SPY and Qs. That's really the ones I mostly trade. It's rare. I do sometimes trade IWM, but it's when I really think I have a bead. Same thing with the Dow. It's, it's only 30 stocks. It does pay a monthly dividend too, which is sort of a little annoying with OPEX. But I mostly trade SPY and Qs. I think you guys know that. Expected move in IWM is $3.36. Max pain pin is 202. With regard to the Qs, The expected move is $6.52. Max Pain pin is saying 488, but I'm seeing on the other sides of it, it's like 492s. So I guess they're also thinking a check back to the 617 breakout. Not, I guess, yeah, between there and the 620 breakout, which was the the last one for the SPY. I told you we'd get 500, right? I said we were getting very close, and I'd be really surprised if we didn't get there. The money flow isn't really confirming yet, but if we do keep going, 502.44 is the 2.618, and on a larger time frame, 508.02 is the 61 2.618. I do think 500, whenever we get these big kind of numbers, it seems to attract sellers and hedging, and I wouldn't be surprised to see it pull back to that 46, which is the 10 MA and a retest of the breakout. So consider that as a possibility. And we did see a little bit of squeamishness and weakness in some of the big tech names, but we will have to see. SMH over 268.93. I see some resistance between 279.84 and the old channel high at 283.50. I think pullbacks, as long as they hold 268.93, are fine. I'd only really get bearish below the 10 and 20 MA confluence here at 265.18. Below there, you could see a larger liquidation break. Maybe at least I would think down to 255s and maybe even the 50 MA. And fill in this little gap here at 242.60, and really the retest of the breakout is 239. So if you want to buy 260, sell 240 as a hedge against longs, and then maybe on the upside sell like 300 plus calls to finance that hedge, I am very cool with that. Nvda, however you want to pronounce it, is get it done, idia. We're over 128.12. As long as we're above there, I think the risk is $10 higher from there, so at least probably 138, 140. If we slip back below 128.12, it's very possible we rotate all the way down to 118s, which would be the trend line and a retest of the channel low. Remember, look above and fails. We had a dub step here. We're seeing some topping tails, so there are some sellers being attracted up here. But it still looks okay. I mean, it's above the breakout. So, if it has another big press up, I'd book some gains. I am a little long on that, playing for that breakout, but I'll stop if it breaks below the range. 1693.24 is the 2 times range in Avgo. It's also the trend. Look, this is going to be a split bro real soon. We've seen some selling in like the Chipotles and stuff, but it'll probably remain strong into the split 10 for 1 on 715. So I still think this is probably go for some new highs, or at the very least holding strong. Intel, they're all excited about this now. I had pointed this out the other day that it was having poor lows and failing to break down, and now they're saying it's like an AI play. I don't know about that. 3763, 3889, and on a a real run, we could get back up to 40s. Shorter term, 3604 to 3641. My guess is they play catch up with Intel until their earnings, and then it probably gets smacked again because Intel is, just not that great anymore. Chipotle or Chipotle, depending on who you're talking to, split bro, and it's getting smackarood. Anything below 60.59, I think, is vulnerable, maybe down to the 200 MA even, which will likely line up with the 2 times range at 51.93. The 2.618 is down at 46.50. What is this? 57. I'd only really get bullish on this back up over the neckline at 60.59, which now likely is resistance. What was support could be some resistance. And we couldn't even break over the 10 MA, so that seems to be the short, which does line up with the downtrend. So far, pull back, check back here. Like if we come down, check back, it might resume lower. We'll have to see. I'd sell some kind of a bear call spread against the 50 MA. Shorter term, if you're playing for a bounce, you could buy like 60, sell 65 or 70. That would make some sense, but looks a little vulnerable. ASML, potential look above and fail here, and potential secure high. That is, of course, a 3-candle head and shoulders. Anything below the head of 1,075.83 could pull back. Would not surprise me to see a check back to the 10 and 20 MA. It could even do that on the open. But as long as we're really holding there, right around that zone at 1,044.28 to 1,056.34, I think it's kind of all right. I mean, we negated a head and shoulders, but we're maybe forming another one. But this trend has been support. They do have earnings coming up on 7/17, and it would not surprise me. I've gone on the record saying I think this is going to be the next split bro. And if that does take place, bromance here could get us back up to 1136.62 to 1145.54, which are the next big fib extensions. SMCI, they kind of muffed it when they didn't pre-announce better than expected earnings. The earnings weren't too bad, but the stock still has been just in meandering here, caught between 1,015 and I guess the higher low here at 773.81. I guess this next earnings is going to be really the make or break. My guess is if it's good, it retests the highs. If it's bad, and it sort of is in that like rising wedge kind of, maybe, I don't want to say it's a bearish pattern outright, but it's a little iffy. And it wouldn't surprise me to see a retest of the range low at the 671s, which will likely line up with the 200 MA. Shorter term, I just think this looks like a lot of chop. We've played a few of these big moves up and some moves down, but, you know, let's just play the channel. I think they're probably, it looks a little more speculative to me here, a little bit more of a guessing game. Apple, new all-time high, hard to take down the cues with Apple. The real OG boss taking things up. The 2 times range is 233.29. The channel high up here is 235.85, and maybe we even get the 2.618 at 240.38. I do not think this will be a split bro anytime soon, and I do think pullbacks to 220-ish probably are viable. I would think the 20 MA, 214s. I don't know that you need to chase it up here. If you are, you know, defined risk, I think, and I would sell probably if we got up to the channel high, but Apple is looking pretty good. Meta hit the channel high, reversed, bearish dubstep. What shouldn't happen, if it does happen, meaning getting over high of day at 537.49, probably rides the channel up. Maybe we even make a move to the 2 times range at 564.31. If you lose the 2-day low at 526.64, I don't know that 523.57 is going to hold it, which was the 3.8 high. My guess is we could come back and retest somewhere in the 517s, maybe even 510s to 514s, which is really a retest of the breakout. If the market stays okay, my guess is we'll just bull flag up here and consolidate and maybe ride the channel, but I don't see the long until we clear today's high. And the more days that we consolidate in this range, the larger the breakout would be up or down if we clear, you know, and negate, or if we confirm and go lower. Googliness, the googliness. We did get the 2 times range here at 191.18 plus. If we keep going, I mean, this is so close to 200. Aren't they going to try? It's possible. I'd be a dip buyer on channel low if we got down closer to the 20 MA. I'm still waiting for that antitrust ruling. I ultimately think that could get us back down to the 178s, 174s, which could be a right out by the dip. That was the big breakout zone. Maybe we can get 169s, but I do think if there is an antitrust ruling, it probably gets bought, but you know, the stock looks bullish here. And if the antitrust ruling goes the right way for them, oof, man, are they going to just take off. Amazon, we're struggling around the $200 range. The green channel high is 204s. The magenta channel high is 205s. The 2 times range is 209.53, which we probably should stay strong into for Prime Day. Usually the stock is pretty strong into Prime Day, and my guess is that pattern will hold. It might be a sell the news, or unless Prime Day is like really super good, but that's July 16th through July 17th. 10 MA is the must hold, 196.45 on, you know, a short-term pullback. A retest of the breakout would be 188.65 to 191.70, which is probably a right or right out by the dip, particularly if it lines up with the 50 MA, which is 186.33 and rising. Tesla. So we're up into the JP fib extension and reference high from back here on 1228. I like trimming up here between 258.70 and 265.13. Their deliveries were a little better than expected, so I do think that that de-risks the earnings a bit, and I think they're going to stay strong given some kind of earnings catastrophe, although shipping, you know, has been expensive and it is overbought on a major short squeeze. But if there is a dip, I think it probably rallies back into the August 8th robo-taxi AI day. The next big upside is 391.26, and if it gets there, I think we're just going to 300. So we'll see. I'd be a seller, by the way, if we did get up that high, particularly if we do it quickly. PANW. It did break out. It would not surprise me to see a check back to the neckline here as defined by 320.46 to 324.68. You know, you can see the little cup and handle. It did break out. We're right on trend line. This ultimately, if the market stays okay, probably gets back up to channel high at 375. But it's taken its time. It's definitely burning out a lot of call premium, but the pattern there is still pretty bullish. Baidu, don't mind if you do. They're in Chinese. They're in like a big war on AI pricing, but we are nearing the wedge high. I do see some resistance coming in between 97.52 and $100, maybe into the 102s, which is the volume distribution. Usually that resists. My guess is the 100 MA. That's sort of where I have my sell orders. You have these lines here. If that ultimately, doesn't reject, if we do pull back and then go, maybe we get up to the 108s to, 107s, the next distribution, which really is 105s through 108s. But I'll be probably selling it near $100 because it's the halfway point in the 100 MA, and just why not? This one didn't work the exact day we bought it, but it hasn't really been against us, which is always nice. Bye-bye. Nice little trend break here. 40% of the stock is in cash, so that's comforting. Above the 20 MA at 74.68 is fine. I think it probably runs into some resistance at 77.77 to 78.34, but you never know. Could move up into the 80s. We've seen this stock make these big moves before. 81s would be the 50% fib. So yeah, I have some orders. If we do pop up into that zone, I'd trim some here and then up here, and I'd get more bearish if we can hold the 10 MA at 73, 75. These stocks have been grim death, but maybe they do get a little bit of, some love. Anyhow, that's the end of the weekend video. I feel like I was talking really fast in this video, so my apologies. You can adjust the speed if you want to go to like 75% speed. Have a great rest of your week. I'll see you for the weekend video, late night Friday, early morning Saturday. Cheers.